All right, I believe we should be recording here. So I am going to share my screen. And the first thing we'll do is look at nope, that's not it. Where did I put that? Here we go. Okay. So what I thought I'd first do is we'll just kind of walk through the review sheet and then also look at if there are any questions to the exercises that were assigned. And then I did get a couple emails on some questions about an exercise or two that I'm going to work through at the end. So, but please interrupt me if you've got a question. All right, so if we just talk about chapter 15, of course you can read 1, 2, 3, and then 4. And we'll come back to 4, but let's just go through the rest of the list here. So know the difference between financial and managerial accounting, right? That's right at the beginning of the chapter. And what are the phases of the management process? And that's, you go into chapter 15. Here it starts on page 750. So what is the difference between financial and managerial accounting? Number 5, look at page 751. Page 751. What are the phases of managerial accounting, or the phases of the management process? Look right at the top of page 754. 754. Going along to number 7, what are the 2 qualities that define direct materials? The 2 qualities. If you look at page, I have it right here, page 759. 759. And talks about what makes up the qualities of direct materials. And quite frankly, that's the same page number for direct labor. 759 is for direct labor, and 760 is for the factory overhead. And then it says, just know some examples of factory overhead. And they talk about, different examples really through the whole chapter, and what we've done really for chapters 15, 16, 17, and 20. What goes into factory overhead? Everything that is not direct materials, direct labor, and has something to do with factory, right? So if it is a cost, but it has something to do with selling or administrative, it goes over there. If it is a direct material, obviously not, or a direct labor, obviously not. But if it has some insignificant cost that you can't directly tie back to the material or labor, it's overhead. And it has something to do with the factory and not the corporate office. What are prime costs and conversion costs? Also look at page 760 for both of those. How to calculate the cost of goods manufactured. Cost of goods manufactured. Show you exactly where that is at. If you look at page 764, and it's nothing nothing that you would not have already known, but if you look at page 764, it just reminds you again, it's what's in the cost of the goods manufactured. That's the area of WIP. Okay, so just look at page 764. It's the bottom of page 764. And what is in the cost of goods sold? Cost of goods sold. I would look at page, let's see it here a minute. $767. In fact, let me make a recommendation on the cost of goods manufactured. I'd also go to page 767. That's a nice recap. And then also for cost of goods sold, that's on page 767. It's in the box, and it's in an area that's called solution. It's a real nice recap of what's in the cost of goods manufactured and what's in the cost of goods sold. Just keep in mind, you will not need to do one of those on the LMS exam. Okay, that one you won't have to do. It's something that you would want to be aware of where it's at for the Cengage take-home exams. And how to calculate gross margin. Let's see if I can find a nice. Well, gross margin, I can't find a nice, fast, easy one here in the book for you, but sales minus cost of goods sold is your gross margin. And what are period costs? You know, period costs are those selling and administrative costs, and product costs, direct materials, direct labor, and overhead. And you can, of course, come up with examples for 16 and 17. Okay, before we move on to the exercises, does anybody have questions over 1 through 17 of chapter 15 here? Okay, if they're not, then I'm just going to move over to the exercises in the book. So, you know, exercise number 1 was, again, looking at what is a direct material, direct labor, or overhead, identifying that. Same with 2. Number 3, examples of overhead. Exercise 4, you know, putting it into one or the other bucket of a product cost, direct materials, direct labor, overhead, or period cost, selling and administrative. Number 5 was just a terminology problem. Number 7, we're again now looking at costs again, identifying them as either direct or indirect. And that's exactly what we did. Yes. Thank you. Yeah. No, you're right. Yeah. Explain that a little better. So I think what they're trying to get at there is you can either have a human being putting together the product, right? Or potentially you could have a piece of machinery. Well, if you're having, you know, some piece of machinery or a robot doing that, and you went through the cost of purchasing that, ideally it would save you labor dollars then, right? I mean, like we talked about where Avera has that robot that brings around the medication throughout the entire campus, and it goes up the elevator down the hall. If they didn't have that, they would have to hire some, you know, CNA or some employee to walk around and dispense the medication. So if you're going to go through the implementation of adding a piece of machinery, that would ideally or be expected to decrease your direct labor. Certainly the cost doesn't go away because now you just bought a piece of machinery. However, it would hopefully reduce direct labor costs. Does that help? Absolutely. Yep, absolutely. You're very true. That's very right. I mean, there is certainly, I mean, let's be honest, the salary would probably be a pittance to what the piece of machinery costs. That's probably an incredible costly robot. But the thing of it is, and where they come from is, that piece of machinery can work 24/7, never takes a vacation, will never have workers' comp, will never have to file unemployment if and when that ever happens. So yeah, there is no doubt extra costs, but it isn't just one employee that they're probably eliminating. It's probably a total of 3, because in any given 24-hour time frame, 8-hour shifts. So that would be kind of what they're getting at there. So you bet. Kind of sounds like a professor, when you think about the 24/7. That's what I was thinking, but okay, that's not funny. Okay, so moving on, number 9. Again, what we were doing there is just putting together an income statement and a balance sheet, and really showing what are the 3 components of inventory. Not the 3 product costs. Product costs are direct materials, direct labor, and overhead. But what are the 3 types of inventory? Raw materials, WIP, and finished goods. Again, that's really what we did in 10. 11 is just showing, what was in raw and essentially got moved over into WIP. And then number 13 is exactly what I showed you in your review sheet as far as where to go and figure out how to do a cost of goods manufactured. And then number 14 is the cost of goods sold. So you can either, for number 13 in your list there, number 13, I would make sure that you've got that referenced also to exercise number 13. And then number 14 there, how ironic is that? It would tie to exercise number 14. And then number 16, exercise number 16, would relate to your review sheet there, number 15. So on number 15 on your review sheet, refer that back to exercise number 16. And then the problems that we did, problems 1, 2, and 3, are, again, just classifying costs as either a direct materials, direct labor, or overhead. And then that was the same thing for 2. And then problem 3A is what was direct and indirect. So 15 was not so bad. You just have to identify or be able to identify a direct materials cost, a direct labor cost, an overhead cost. Is it a product cost or a period cost? Is it direct or indirect? Before we move on, anybody, any questions over chapter 15? All right, let's move to chapter 16. Again, number 1 there, it should say reread chapter 16. Let's jump to number 5. What are the 2 main cost accounting systems? What are the 2? That's on page 794. 794. Job order or process. Know how to calculate overhead rates. Well, remember, overhead rates is going to be based on that numerator being what is that estimated overhead, right? And then the denominator is, what drives those overhead costs? Is it machine hours? Is it direct labor hours? Is it direct labor total cost? So how to calculate it? We do several problems or exercises that kind of relates to that overhead rate, ultimately to a rate. And then know how to calculate over or under applied overhead. And what I would tell you with that one, if you're struggling with that, on the LMS, on your home page, underneath where I've got all of these recordings saved, there is I want to say like a 4-minute, 3-minute demonstration where I'm explaining over and under applied overhead and the whole bucket and what's actual versus what's applied and how that ends up being over or under. So that's where I would tell you to look at that if you're struggling with over or under applied. Looking at the exercises for chapter 16, we're on page 821 there, number 3. I wouldn't get too wound up about number 3, especially because we've done an inventory chapter already about FIFO and LIFO. So, you know, as long as you can look over that exercise and see what we're doing and it makes sense, you're good. Number 4, I'd be sure to look at that exercise. Here is an example of the entries to remove raw materials and putting it to the job. And what's the big key here is you see the job numbers, and then there's also an indirect, and that indirect is overhead. Likewise with number 5, first, letter A is the purchase of the material. So you got a debit to the materials, raw materials account, and a credit to AP. Letter B is exactly like number 4, where we're taking it out of materials, out of raw materials, and putting it to the job. So putting it to WIP. And then letter C is just looking at what's left over. Number 6, what are we doing there? We've always talked about so far here materials or raw materials, but now we are incurring factory labor. So direct materials, but now direct labor. And in this problem, there is the vast majority of it are jobs. So those are going to go to WIP, but then there's one there that's indirect. So that's going to go to overhead. Number 8 is the same thing again. It has the overhead, the direct labor, but then there's also a component of overhead. So you see all the jobs, and then you get down to the bottom there, factory supervision, which would be overhead. Exercise number 9 is an example to looking at your review sheet. Number 6, I would reference that to for item number 6 there, refer that to exercise number 9. And what we're doing there is figuring out how to calculate overhead, and then more importantly, then applying that overhead. Again, with that listing of chapter 16 there, number 6, I would refer that also to exercise number 11, how to calculate overhead. Looking at number 12, exercise 12, what are we doing there? We've already looked at direct materials. We've now looked at direct labor. And ultimately here what we're doing is moving it from, so we had raw materials, the purchase of it, then we had the requisition of raw materials into WIP, and then ultimately here now in number 12, we're moving it from WIP to finished goods. That's exactly the same thing with number 13. First, we looked at direct materials, labor, overhead. At letter C there, we applied overhead. And then letter D, it's moving on from WIP to finished goods. It's the whole cycle with number 13. Number 13 is one you want to probably circle because it shows the direct materials and the indirect. So direct and indirect for materials, direct and indirect for labor, and then overhead. And it kind of goes back to how do you calculate the overhead? They showed how to calculate it, and then they showed how to apply it. And then ultimately it got finished. So then we show how it moves into a finished good. And I think for number 15, I would just review it, but there's nothing new in exercise 15 that isn't already covered in the exercises that we did. So problems 1A and 2A, I think what I would do with those, I would at least look through them, know those journal entries. There's nothing new in problems 1A or 2A that isn't already broken down into little bitty pieces in the exercises. They just, once again, show again how to do the journal entries from one area to the next. In problem 2A, it's exactly the same. It's just laid out different, showing what is direct materials versus what is an indirect material, what is a direct labor versus an indirect labor. And then it shows, you know, okay, how do we apply this overhead? And then ultimately they were finished. So problem 2A is very similar to exercise 13 in that it kind of shows the whole entire cycle from the very, very beginning to the very, very end. Questions on chapter 16? All right. Anybody else? Okay. With 17, what we got going on there is, again, I told you don't need to read the chapter. So if you just look at the three exercises that we had, really all we're doing in 17, which is really an extension of chapter 16, but we're just showing how it's going from one area to the next. So in 16, we went from raw materials to WIP, WIP to finished goods. In 17, what are we doing? It's going from raw materials to WIP Department 1. Then it goes from WIP Department 1 to WIP Department 2. And then from WIP Department 2 into WIP Department 3. And so forth until finally it goes from WIP Department 6 into finished goods. That's really what is going on in chapter 17. And it's, quite frankly, that's the much more realistic part of manufacturing. It just doesn't go from raw into one big gigantic WIP and then it's finished. It goes from different phases of completion and then finally to finished goods. So unless there are questions over 17, I'm going to move on. Then we are into our last chapter of this unit, chapter 20, which starts on page 994. Let's walk through these too. So again, once again, reread chapter 20, not 19. And we'll come back to number 4. So number 5, make sure you know what a fixed, variable, and mixed cost is, right? Fixed costs, variable costs, and mixed costs. I'm certain all of you can identify that. The ones that I'll have are going to be clear, they're obvious, they're not, you don't need to worry about, well, could this be this or that? You know, a salary is fixed. It doesn't matter if you work 30 hours a week or if you work 80 hours a week, it's salaried, it's fixed. Variable is the per hour. And then we talked about a mixed cost where there's a fixed component to it. So, and that would be kind of like a person that's paid overtime, right? So for, if you're getting paid 40 hours, you're pretty much guaranteed 40 hours. Even though you're hourly, they're going to tell you you are guaranteed 40 hours. So if you're getting paid 10 bucks an hour, that's 400 bucks. However, the moment you go over 40 hours, then it gets to be time and a half. Well, then there's that kind of that mixed cost, so it increases. But mixed would be like the photocopier lease. You know, it's a base of $1,000 a month, whether you use the thing or not. But the moment you start using it, then it is a half a cent per copy. So it's fixed, and then there's the mixed variable component. Be familiar with, yes, go ahead. I would, yeah, that's a good question. I would say if I was to identify that, I would call that variable, because unless you're the consultant is going to always bill you the exact amount every time, like a salary, and they don't. I mean, the consultant is a very short time frame, you know, usually. It's not eternity where they're there forever, or an attorney. They're going to bill you according to hours. So it could be, you know, 20 hours this week. It could be 60 hours next week and 10 hours the following week. I would say a consultant, an attorney, those kind of professionals, because they're not on your payroll as a salary, I would call that a variable cost. Yeah. So the high-low method, we actually, we did one of those, of course, in our exercise. I'm going to refer you to our text. I don't know if I can find that. It's very straightforward. Yep, that's exactly right. The high-low method, item number 6 here, refers back to page 1001. You could either look there or the exercise that we did. And let me just tell you exactly which exercise that is so you can refer that right now. Exercise number 7. Know how to calculate contribution margin and the contribution margin ratio. All right, so what I am going to do here a minute, I want to write this down. So bear with me here. Yeah, okay, yes. Bear with me here a minute now. Doggone it, I always forget. Where is that darn? All right, are you guys there? Oh, here we go. Okay. Hold on, it's coming up here. All right. Apollonia, is it a whiteboard coming up? Okay. What I really want to show you here is just to always, almost ready. All right. So we've got sales, variable costs, and then we got contribution margin. And one thing is always to remember is sales always is 100%. So they may give you this number or they may give you this number. They've got to give you one of those two, but this is always 100%. So there was a problem that said variable cost is 60% of sales. You don't need to worry. You know this already, so this has to be 40%. Or they'll tell you the contribution margin is 40%. Well, then by default, that has to be 60%. Okay. Now, when do you use the selling price or you're getting at the unit? That normally has something to do with that we're trying to calculate break even. And when we're ever looking at break even, what we're trying to do here is the numerator here is always your fixed cost, your total fixed cost. This is your contribution margin by unit, because what we're trying to figure out is how many units do we need to sell in order to get break even. So sales, it was $100 per unit, and our contribution or our variable cost is 60%. Let's just continue with that. So our variable cost is 60 bucks. That means our per unit cost is $40 per unit. It's a contribution margin per unit. And hopefully, as we do some of these other exercises, maybe I'll answer better your question, Apollonia, if we haven't hit it already. But just to clarify it more, this is the big thing, honestly. I'm not sure that everybody understands that sales. Oh, you bet. That's what I think we oftentimes forget about. Okay, so now let's see if I can go back to, do you see my chapter 20 list again? Okay, thank you. Hold on here. Let's see if I can. Okay. How about now, Apollonia? Is that right? Okay, thank you. All right, you tell me. Not as straightforward as you would think. So, does that help? Okay. So then, if we look at some of the exercises from chapter 20, does anybody have any questions over those? Since we just did them, I won't go through them individually here since we just did them. So again, maybe I should. Let me do that. Page 1031 is exercise number 1. So what we're looking at there is it a variable, fixed, or a mixed cost? There we go. We hit that again. I really believe exercise number 2 is one you should focus on. Number 2. Likewise, with number 2, exercise number 6. If there's 2 exercises that have a little bit of confusion in them, but yet has some very, very important concepts that we talked about when we went through those, is number 2 and 6. And if you look at number 6 in particular, you look at the problem there, it says total fixed cost of 600,000. That number doesn't change. That's fixed, right? But if you look at the fixed cost per unit, then that number changes based on volume. Total variable costs, total variable costs will change based on volume. But the total variable cost per unit does not change. And let's think about that here for a moment. When we were looking at the contribution margin, sales minus variable costs equals contribution margin. That does not change by unit. The sales unit price minus the variable cost per unit is a contribution margin. That's per unit. That doesn't change. And we can take that number and say, well, now our volume increased by 10%. So we can up it by 10%. But when we're looking at in total dollars, of course, that will change. But by unit, the variable cost stays the same. And our example there to help you remember is an hourly person. They're getting paid 20 bucks an hour. They get paid 20 bucks an hour whether they work 2 hours, 6 hours, or 30 hours. That stays the same. And we're not talking about overtime. So it's the per unit that stays the same, but in total, it changes. And then the rest of these problems, number 7 refers back to that high-low. Looking over exercises 3, 4, and 5, where again, we're identifying what's fixed, what's variable. 9 moves us into contribution margin. And then 11 gets us to figuring out break-even point, and then this desired profit. 13, again, more break-even. And then problems 1A and 2A, all we're doing there is identifying fixed, variable, and potentially with 1A mixed costs. Fixed, variable, and mixed. Problem 2A, we are taking that income statement, breaking it out to fixed or variable, and then playing with some of the players there, where it'd be, are we going to increase fixed costs? Are we going to increase volume? Are we going to reduce the selling price, increase the selling price? So those can be adjusted, and that's the benefit of cost, volume, profit. All right, any questions over chapter 20? Apollonia, not to put you on the spot, but do you mind if I use your, I liked your question as for a good review one. Is that okay? So I'm going to actually pull up that email if I can find that. Here we go. All right. So do you see the email? Oh, okay. So if you don't mind following along on this one, this is a really good problem, and or a good question. I'm assuming that you got this from Cengage, or you made it up. Okay. Okay. So if everybody wants to work with me with a piece of paper, let's just walk through this. Okay, the unit selling price is 237. The variable cost is 106. Total fixed is 770. Now this problem is going to be different for each and every one of you on Cengage, but let's just do the overall big picture of just this problem. Okay, it says the company has decided to increase the wages of hourly workers, which will increase the unit variable cost by 10%. Okay, the increases in salary. So let's just, before we move on, unit selling price. So let's get to contribution margin. Selling, 237, less variable costs. Well, let's not put in 106. Let's put in the increase of 10%. So how do you get that increase? You take 106 times 1.10, which is a 10% over what we have already. Okay, so taking 106 times 1.1, which is 110%, that is 116.60. Everybody with me? So now what is our contribution margin? 237 minus 116.60 equals $120.40. Okay? Everybody there with me? Let's keep reading here. Increases in salaries of factory supervisors and property taxes for the factory will be increased by 4%. Okay, so now we're going to calculate break even. Well, what's the break even formula? Fixed costs divided by this contribution margin we just calculated. Well, the fixed costs are no longer 770, but rather an increase of 4%. So you take 770 times 1.04. That's going to give you the number for the 4% increase. Well, that's 800,800. 800,800. So there's your new fixed cost. That divided by your contribution margin per unit of $120.40, which we just calculated. That tells us then the new break-even point will be approximately 6,651 units. Okay? Let's keep reading down. This is good. If fixed costs are $750 and variable costs are 60% of sales, the break-even point in sales dollars is, okay, well, first, let's go back. Sales is 237. Variable costs, now, it says 60% of sales. So take 60% of 237 and you get 142.20. So now what's our contribution margin? Well, it's 237 less the 142.20 equals a contribution margin of 94.80. Okay? Yeah. They didn't give you a sales number? Or units? I don't think you can. That's interesting. Um, yeah, because I know we can say sales is 100%, variable costs are 60%. That's a contribution margin of 40%, but we don't have an idea of the dollar or the number of units or a selling price. After we're done with this lecture, I'd like to see if you can tell me where that one is at, because you would need a little bit more information, unfortunately. And that's why I assumed when I got this email that that referred to the unit selling price of 237 in that earlier part there of your email. Okay, well, I guess the reassuring thing, I guess, Apollonia, is that question that you got there, the if fixed costs are 750, you're going to get a ton of those on the tests where I won't give you all the information and you won't be able to figure it out, but yet you have to answer the question. So no, that you got to have more information than that. So let's look into that. So don't worry about that one. And then the last one there, it says this Zippy has a selling price of 90. The variable cost is 40.50. So if we just take those two right away, our contribution margin is 49.50. And they tell you what the fixed costs are, so that's separate. Current sales are 12,000. Okay, so if we took the contribution margin of 49.50 times 12,000, we get 594,000 of dollars. Less our fixed cost of 170 is an operating income of 424. And the question is how much operating income change will there be if we increase by 5,000 units? Well, then all you have to do is take your 49.50 again, your contribution margin, now times 17,000 units, and you get 841.5. Well, less your 170,000, again, a fixed cost, is a new number of 671.5. So the difference between 671.5 and the one that we just calculated of 424,000, the original at 12,000 units, that's the answer to how much will the operating income change. So, oh, you bet, you bet. So we at least got 2 out of the 3. That one needs to have more information. So anybody else have any other questions over these basically these 3 chapters, 15, 16, and 20, a little bit out of 17. Anybody? Any other questions on that? Otherwise, help me out here. The take-home tests are due tomorrow night, I believe, and I see many of you have got a lot of them done already. Take-home tests are due on the 9th, and our in-class exam is, of course, on Monday, 13th. Unfortunately, you saw in my email, and this is not by my design, but because of the university's policy, we'll have that exam. It'll open at 7:30, like we normally would have had with our class. So, any questions on the test or any of these chapters or anybody? That's no problem. No problem. Any of you have problems, shoot me your question in an email. Provide your phone number because I may just call you and go over it that way, depending upon how involved the question is. Yeah, if there's any other questions, if there are no other questions, then I guess I should let you go. I appreciate all of you logging in. And if there's anything I can help you with between now and Monday morning, be sure to let me know. And until then, I wish you all a wonderful Easter, and that you are spending it with your families and can set aside some time to give thanks for the true meaning of Easter. I mean, really, let's be so thankful that no matter right now that this world is in complete chaos, one thing is for sure, we serve a mighty God, and He paid the ultimate price for us so that we can one day also enjoy eternal life. So if there is anything else, I'm going to let you go. Blessings to all of you. Have a great weekend, and we will resume again next week. Take care.